Hi friends, this is Anders Ibsen from Windermere Professional Partners, managing broker of Anders Ibsen Homes. Now, as the veteran political operative James Carville once said, it's the economy, stupid. Tariffs are on everyone's mind. A lot of people have been asking me about what the recent trade war is going to do to everything from your housing value to, if you're a first-time home buyer, how is this going to affect the loan I get? And the very shorthand answer is it's pretty negative, but it's also extremely unpredictable. So I can't predict what's going to happen as of the filming of this, but I'm going to do the best I can to explain what the big pieces are and how they affect you and your property. So this video is not a deep dive into trade policy, but just to briefly give you an overview, what a tariff is a tax imposed by the federal government on American businesses when they import certain things from certain countries. And what the tariffs are and who's paying them has been changing constantly, so we can't really predict what's going to happen. But generally speaking, when companies are taxed higher, they tend to pass those costs in the form of higher prices down to consumers. So tariffs are generally speaking pretty inflationary. So what has been one of the major trends influencing mortgage rates? It's mostly been inflation, stubborn, sticky inflation. The other problem that affects mortgages and the overall housing market is the bond market, because there really is no central authority that sets mortgage rates. Mortgage rates are basically set by the bond market because when you buy a house, your bank sells your mortgage in a place called the secondary mortgage market where, long story short, your mortgage joins a securitized pool of bonds that are called mortgage-backed securities. So effectively, most mortgages in the United States are part of the bond market. And for a good reference for where mortgages are heading, look at 10-year Treasury notes. That's a usually pretty reliable indicator for where mortgages are heading. And not coincidentally, 10-year Treasury notes are in a world of pain right now because there is so much unpredictability and chaos due to the trade war. Now, we don't know where this is going to head. In a perfect world, we would obviously see a rolling back of what's been happening with tariffs. But in the absence of major rolling back, the next best thing would at least be certainty. That's the most important thing to most business and most investors, is at least being able to predict what's going to happen. And if businesses in the United States and throughout the world knew that at least there were going to be a predictable range of new tariffs that they can plan around, move their supply chains around, etc., that would at least give markets some guidance, and we might see a little bit more certainty as a result. But the biggest challenge besides the existence of these tariffs has been the unpredictability, the constant changing, the exemptions, the non-exemptions. People can't really predict what's going to happen. So as a result, that's the other problem that we're seeing indirectly affecting home buyers or home sellers has been volatility. That's been the biggest takeaway from this tariff conversation is bond investors are increasingly being less confident in the 10-year Treasury as an investment, as a safe haven. And the worst case scenario that we could see would be a run on US bonds from foreign investors. So there are a number of countries like Japan, like the European Union, Canada, China, of course, who own lots of US government bonds. They basically are owners of US federal debt. And if these larger countries, these larger international investors lose confidence in bonds, that could do a lot of bad things. It could drive up interest rates further. It could drive up the US deficit, the national debt, all of which would have pretty bad effects on the economy and on rates as a whole. So hopefully it doesn't come to that. So no one can really predict what's going to happen, at least as of the recording of this video. But here are some general predictions based on the big pieces. The closer that we are to predictability, the closer that we are to knowing that these are the new rules of the road with regard to tariffs and trade, then the better the market is going to be because at least the market can adapt. The worst thing that we can see is continued unpredictability. So that's the general guideline. How this is going to affect everything from prices to rates, we can't say. But generally speaking, the more continued the uncertainty is with trade and the bond markets, the more that we're going to see elevated mortgage rates, which has been one of the biggest things slowing down the housing market and making housing more and more unaffordable for first-time home buyers in particular. So if we continue seeing chaos, then I would expect mortgage rates to continue living in that high 6%, 7% range. The other factor as well is prices. I still think that we're going to see stable to even moderately appreciating home prices. And the simple reason being there's still a housing shortage. That's not changing because so many Americans, I think over 3/4, last I checked, are still sitting on what are called the golden handcuffs, those 3% or so pandemic era mortgage rates. And because people are so reluctant to sell or refinance and give up those rates, that is artificially suppressing supply. So even with these really weird mixed market conditions of high rates, we're still seeing stable, if not modestly increasing home prices. And then finally, what I think we can reasonably predict is a lessening of the presence of new construction in the housing market. And the reason being, new construction is extremely price sensitive. With increases in labor costs, in borrowing costs, and in material costs due to tariffs and due to higher inflation as a whole, builders are increasingly going to hold back, and we're going to see less and less new supply enter the housing market in the form of new construction, which ultimately I think is going to hurt first-time home buyers more than anyone else. Besides those general predictions, I can't say because this is such a fast-paced, chaotic time that we're in. But overall, don't panic, be factual, read unbiased news sources, and if you ever have questions about how this impacts your particular situation, because residential real estate is incredibly locational and block by block. There are no general rules because there are no general houses. You are always welcome to reach out to me anytime if you need an unbiased opinion on everything from the value of your house to an assessment of general market conditions, or even if you just need a recommendation for a vendor or some other service to be provided to you. You're always welcome to call, text, or email me. Thank you so much for watching my video. Hope you have a great day and enjoy a lovely spring. Take care.